Hello guys, in this video I will show you what is initial balance and how to use it in your trading to increase your win rate. So basically what initial balance is the first hour after the New York Stock Exchange open. And in my case I used not first hour, I used first 45 minutes because I find it to have better win rate. In the reports I will show you later what I mean. So we have two different day types for the initial balance. The first one is the single break, so basically if the price breaks it only from one side, and the second one is when the price basically breaks it both sides, so it breaks the low and the high. And also in some cases there isn't any break, so basically an inside day, and it's only like 2%. Okay, let's I will show you the reports. 1 second. So for ES it's basically 2%, 2.3. So there's no break, and it's usually like bank holidays or something like this, like weird days that don't have volatility. And or if before the market open there is like a huge spike and it just corrects the rest of the day, but it's only 3 out of 128 days, so it's very unlikely to happen. And yeah, I have mine set to breakout as wick only, so basically this is a breakout already, only the wick. So now let's talk about how I use it and how you can use it to benefit in your trading career. So first of all, you can find trades with it. I personally don't do it. I have my own strategy. It's only like the other two for me. So basically to set targets and to use it as bias. But you can also trade only with the initial balance. So basically you can, for example, when you have a break, you can catch the retracement and enter, for example, here. I will show you later how it looks. And then, as I said, you can set targets. So basically you have, I will show you now, you have these levels. I have mine set to these ones. These are my settings, and I use them as my bias. And not my bias, my targets. So I will show you why and how I use it. If you go to the reports, initial balance breakout, here you go to levels and breakout days. So for breakout days, when we have a breakout, it's pretty much 96% that the price reaches 0.2. So if we have a breakout here, it's very likely that the price will hit, let me grab the price will hit the 0.2. And so this level, 96%, and for the other ones, 90% for 0.3, and it decreases to 0.7. I only use these ones because there are more than 50%, so it's basically an edge, and it's very likely that it goes to these levels. So for SPX, Friday we had a bank holiday day because it was the 4th, and even with this weird day when we had basically no volatility, it broke out and it went almost to 0.5, which was 0.5 is 74%, but it didn't hit. It hit only 0.4, but still it's very good way to set targets. So this is the first example. Here's another one from the day before. Again, it hit 0.5 and reversed. 0.5, 74%, and instantly reversed. Obviously I didn't trade the shorts. even though we had a setup like here that follows my trading rules, but I don't trade against the market flow, and we are at all-time highs, so I didn't take this trade. But as you can see, it's a very good way to set targets pretty accurately with data. Okay, so let's go to the day before again. So in this day we just broke out and we went up and up all day, but still I targeted 0.5 again. It's 0.5, 0.4 is like my standard thing, and it hit, and it hit even one, which is less likely. 0.7 is 62. Okay, so this is the way how I use it to set targets. Let's now go, do I have it here? Okay, so you can use it as bias. What I mean by that is that if we have a break like this, we could have a bias that we are going to go up. In this case, we had downward movements, which were also a bank holiday, so it's a bad day to trade. I didn't trade that. But for example, this one, even though there was a huge move even before the New York Stock Exchange open, we could still trade it and have the bullish bias and target like 0.4, 0.5, and still have success, because it's kinda weird to trade at all-time highs, and most people either try to short, and because it's everyone thinks it's overextended markets and stuff like that, but we're at all-time highs, no one knows what will happen. And next thing about initial balance breakouts is the report about the retracement levels, which are these ones. So in my case, the gray ones, like here. And what I mean by that, let's go to the reports by retracement. 60% of the time when we have a breakout, the price returns to the 25%, which is this one. And it's also something you can use as like stop. You could like, if you go along here, it's a good thing to always check the reports and then set your stop loss, for example, under the middle one, which is the 50%, and it will be an edge because it's only 38% of the times that the price will go there, so it's more likely to not hit your stop loss if you set it under the 50% level, or even the 75%, which is 12% of chance, but it's very big stop loss. So, but yeah, this is pretty much all the things that I look for in the initial balance. The website and indicator that I use is Edgeful. The link will be in the description. And yeah, if you have any questions or suggestions for the future videos, let me know in the comments, and I will definitely record the video about it. And see ya.